stock volume spike discussion tips and tricks. Stock volume spike discussions, tips and tricks. We are on the monthly chart of Hologic Incorporation, the APXHOLX, Hotel Oscar Lima S-Ray, and we want to discuss stock volume spike discussion, tips and tricks. All right. So on this monthly chart, we can see that we have a surge in trading volume, or a volume spike, a significant surge in trading volume. Right, it is. The average volume was around $100 million shares. Average volume 100 million shares. Now we have this volume spike, bringing the total trading volume in a region of 270 million shares. All right, more than 2 times the average volume. This is what we call a surge in trading volume. I want traders to pay attention to the candlestick bar that is corresponding to this volume spike. This is the doji candlestick bar here. All right. We want to talk about the volume spike discussion, tips and tricks. All right. So first, we have a volume spike that is occurring after the price breaks below a bullish trend line. So you can see here what has happened here. The price D below the red trend line and was retesting with this candlestick bar here. So break below and retest. So the first thing that is coming to our mind is to give priority to bearish signal below that trend line, because a phenomenon is occurring. All right, price D below, breaks below a bullish trend line, and we're retesting it. All right. In fact, as you can see here, the price gap down. Okay, so there's a gap here. There's a gap here on this monthly chart. So the stock did close the previous month, somewhere in the zone of $29, and the following month it did open somewhere in the zone of $24. So there is a gap here. So after the price breaks below the trend line, retested, there was a gap, right, gap down. But now, after the price gap down, we have a doji. A doji candlestick bar represents an uncertainty in the financial market. So anything is possible after we see a doji. In order to confirm whether it's a bullish reversal or a bullish, in order to confirm that we have a bullish trading setup or a bearish trading setup after a doji, the following candlestick bar is very important. All right. So we can see that after the price gap down, we have this doji here. Price went down and formed this doji with a volume spike. Talking about volume spike discussion, tips and tricks, the takeaway today is this: that when we see a doji candlestick bar, all right, and a volume spike, all right, we will wait for the next candlestick bar. All right. So here it is, see price gap down. So if the price gaps down, what is it telling us? It's saying that the momentum is bearish. So price gap down. Now we have a doji, which is representing uncertainty. All right. And also a volume spike. Now, in my view, the first thing that should come into our mind is to sell, because the stock gap down. So somebody push it down. Some people push it down. Also looking at the price itself, we can see that the price was trending fast, break below the trend line and retested, which is a bearish trading setup. Now the stock gap down. So bearish orders has been filled. Now we see a volume spike and also a doji. What's going through your mind? What's the first thing coming to your mind? Will be sell. All right? Sell. So because a doji is uncertainty, all you can do, you see where the price did close for the doji. So you see the volume spike and a doji. Next time you see that, just draw a line at the closing price of the doji. So here, it will be here. That's the closing price of that doji. See, this is the closing price of that doji. You draw a line there. So all you have to say, priority to bullish signal above $23.98 and priority to bearish signal below that level. Because we have a doji after a gap down and also a volume spike, we draw this warning line at the closing price of that doji. All right. Now we say priority to bullish signal above and priority to bear signal below, which means if it breaks a bow, retest, turn around. Remember what I said to you, that after the doji, the following candlestick bar will confirm to us whether we have a bullish trading setup or a bearish trading setup. But when we are talking about bullish or bearish trading setup, we are not talking about a trading signal yet. A valid bullish trading setup will generate a valid bullish signal. On the other hand, a bearish, a trading setup will also generate very valid, bearish signal. So what has happened here? We have the volume spike. This is a typical bearish candlestick pattern. A doji followed by a bearish candlestick bar. After this monthly candle here, this bearish candlestick here is closed. Am I talking to myself? Let's zoom into it, After this candles here is closed, so we have a doji and a bearish candlestick bar. This is a bearish trading setup. Now, you see, what has happened after this candle did open, this is what I was saying to traders all the time. You want to sell, you want a rally, which is good. So, though we have a bearish trading setup, as this candle open, professionals want to sell, but they want the price to go up first. This is nice. This is nice. All right? It's better that way. All right? Sometimes you will see the bearish candlestick bar and people will sell it straight away down. But this is a better scenario because the price rally up again to retest that warning line, 23.98. And from there, it found a resistance and came back down. But the stock did open here, went up to 23.98 before closing here. So the takeaway is that a volume spike plus a doji. If the following candlestick bar is bearish, we have a bearish trading setup. All right. If you have a doji and a volume spike, and the following candlestick bar is bullish, we have a bullish trading setup. But in order talking about stock volume spike discussion, tips and tricks, what we are saying to traders, whenever you see a volume spike that is corresponding to a doji, that candlestick bar should close first. If that doji is closed, draw your warning line at the closing price of that doji. It makes sense? But now then you say priority to bullish signal above and priority to bear signal below. The reason is you are preparing yourself to buy, you are ready to sell and to buy at the same time. So before this candlestick bar is closed, you will be giving priority to bear signal and you may even take advantage of that. So if instead of a bearish candlestick bar after the doji, we have a bullish candlestick bar, you will also participate in that bullish candlestick bar that is following the doji because you have drawn your warning line and you are giving priority to bullish signal above and you are giving priority to bearish signal below. In all cases, it is important for traders to use a multiple time frame trading method. So for instance, if you see this on a daily chart, remember that on the daily chart we see a lot of a distortion, so prefer weekly chart. If you see that on the weekly chart, one example of weekly chart, multiple time frame trading method, the weekly chart reconstitutes the trading setup, the 4-hour time frame or 2-hour time frame for the signal, all right, and the 15-minute time frame for the entry. If you see this on the 4-hour time frame, talking about top-down trading method or a multiple time frame trading method, that will be a 4-hour time frame for the trading setup, 50-minute time frame for the signal, and the 3-minute or 5-minute for the entry. The top-down trading method or the multiple time frame trading method allow us to control the risk and to trade like a pro. So very simple. A volume spike plus a doji, draw the warning line at the closing price of the doji, priority to bullish signal above and priority to bearish signal below. But remember, whenever you see this trading setup, check what has happened before. Now, what has happened before, in this case, the price was trending, and now it breaks below a bullish trend line, we're retesting it. That will give you a bit of idea what is likely to take place, which means you will be watching more, okay, because it breaks below a bullish trend line. You don't want to buy here, okay, so you may ignore the priority to the bullish signal above in this case, because you see that, well, there was a bullish trend, price break below retest. I'm not interested to buy. If there's a bullish signal, I may consider that risky and stay away from it, but I will wait. If, only if, there is a bearish trading setup, I will sell below that warning line. All right? So check what has happened before. That will also help you to improve the strategy of drawing the warning line at the closing price of the doji when we have a volume spike. If you have any question or suggestion, put in the comment section, and in due course, I will record another video to answer your specific question. We are the TSTW24 traders talking about stock volume spike discussion, tips and tricks. Happy trading to you all, and speak to you soon.